Welcome dear students. We will be discussing composition scheme in our lecture today. Composition scheme section 10, this is what we are studying, and this is part of your chapter 3, which is the charge of GST levy and collection. After section 9 is section 10. Section 9 is a general section addressing GST, how it is gonna normally apply. Whereas section 10 is a kind of concessional scheme. Okay, composition scheme is nothing but a concessional scheme. So now let me tell you, my dear students, this composition scheme has been undergoing changes in terms of rates of taxes and in terms of turnover also. In the latest meeting, 23rd GST Council meeting, which was held on 10th November 2017, even in that meeting, they recommended some changes, like the turnover limit eligibility criteria. The turnover has been increased to 1.5 crores. You know, the recommendation is to make it 1.5 crores, and the rates have also been slashed down. So prior to this, in the September meeting also, they had increased the turnover. So 75 lakhs became 1 crore became 1.5 crores. The recommendations I'm talking about. So composition scheme is changing if you watch carefully. Okay. So now first of all we need to understand that so far under GST 90 lakh business entities have got registered, and more than 15 lakh entities have been has opted for composition scheme. But still the government feels that they want to make this scheme simple, and they want to attract more and more SSCs to opt and under this scheme to come forward and get registered here. So that is the reason they are reducing the rates. They are also increasing the eligibility criteria, the turnover limit. So many recommendations are coming just to make it more attractive and to welcome many SSCs into the composition scheme. That is the plan of the government. Okay, now all our old students, you know, we used to hear about this composition scheme even in VAT. And if you remember anything about it, if you recollect, it is nothing but what happens is, you know, a regular taxpayer is overburdened with so many compliances. He has to file a monthly return, he has to pay monthly taxes, and then the procedures are little elaborate for him. Detailed records are needed. So not every shop or shopkeeper or a small SSC can afford to do it. You know, small SSCs, we should encourage them to be focusing on their business rather than putting a burden of daily compliance, monthly compliance. So small SSCs, growing SSCs, they need some kind of, you know, shortcut scheme. Rather than the regular scheme, they need some shortcut scheme. So this is what we are going to discuss under section 10. Okay, 10 is simple section, and again I will rate this category A topic. You may get a question from composition scheme. It could either be a theory question or it could be a practical question. We will do both theory and practical to understand this topic in a better way. So first of all, let us understand the scheme carefully. This is a scheme. For us to understand, we have to, you know, bifurcate this scheme. First of all, we need to bifurcate the dealers. So when we are talking about the supplier can be of three categories. Okay, the one whose turnover is less than 20 lakhs, turnover is greater than 20 lakhs but less than 75 lakhs, and a case where turnover is greater than 75 lakhs. See, I am referring to 75 lakhs because even ICI study material has got the same number. However, you know, we know that cutoff for your May attempt, all the amendments which have happened up to 31st October are relevant. So let me update you with all the amendments. So as I told you, in the last two GST Council meetings, these limits have been increased. Okay, so what they did is 75 lakhs became 1 crore, and further this 1 crore is proposed to be increased to 1.5 crores. This was 22nd meeting, this is 23rd meeting, and this was held on 10th November 2017. Okay, so on this day they recommended, GST Council has recommended that the limit for composition scheme shall be increased to 1.5 crores. Okay, because we are studying from your study material, you should not get confused. I am giving you both the numbers, the old as well as the new. Okay, anyways, you can look into your revision test paper which will come close to your exam and update it accordingly. Okay, so now we are saying these are the different types of dealers. Now the person who's falling here is a very small supplier. Very small supplier exempt from GST. So this kind of person will not be troubled at all. Okay, whereas a second guy, okay, second person is a growing supplier. So because he is a growing supplier, we need to support him. So we are giving him an option. He has an option. He can opt for composition scheme. Okay, and how is this composition scheme better than the regular scheme? How is it better than the regular scheme? So here we are saying if a person is opting composition scheme, he is getting lot of advantages. Okay, advantage number one, how is the scheme? Okay, small rate of tax. He has to pay small rate of tax on the turnover. No classification required. You need not classify your goods. Okay, because each good, if you go by the HSN code and all, different rates may apply. Irrespective of the description and nature of goods, you can simply go with this small rate which is given, and regular rate is not applicable, small rate is applicable. We will see what is that small rate, but just keep this point in mind. Okay, then what else we are saying? This composition dealer can't take input tax credit. This composition dealer can't pass input tax credit benefit to the buyer. The reason being, see, the buyer himself is paying a very small rate of tax. When such a small rate of tax is paid, why do you want credit? So that is how we are denying. We are telling to the buyer, the one who bought the goods from the composition dealer, we are saying him, you have paid negligible amount of tax, why do you want credit? And to the same composition dealer, he must have purchased goods from regular people, he must have paid some regular taxes, but because the ultimate tax is very small, we can't give him credit for his purchases. Okay, anyways, the government is taking very small, reduced rate of tax. When they are taking reduced rate of tax, where is the question of giving you credit? So you will not get credit, you can't pass on the benefit of credit. See, this is a shortcut scheme where we are not expecting detailed records from you, where we are not asking you to come up with a monthly filing of return. So when we are giving you so many advantages, obviously we can deny some favors. So we are saying we can't give you credit. Then further they are saying that you cannot charge from the customer. You cannot take it from the customer. You cannot charge the customer. You can't charge from the customer. Can't issue tax invoice. You can't issue tax invoice. In order to remove the goods, you will be using a document which is called bill of supply. Okay, then what are the advantages? No detailed records needed. So others might be maintaining detailed records, but for you it is not needed. Then we are saying quarterly returns. You will be submitting quarterly returns. You will be making quarterly payment. The regular dealers might be paying on a monthly basis and filing return on monthly basis, but you can do it on quarterly basis. So this is the scheme that has been offered under composition. Okay, composition is simple. It is just like the old concept which we had studied in VAT. The main base of the scheme is there are some growing dealers, their turnover has not crossed certain limit. Okay, the limit is 75 lakhs, which has been enhanced to 1 crore, and further in the latest meeting it is made 1.5 crores. Okay, for such people we are saying you can pay a small rate of tax to us. But to enjoy the small rate of tax, to enjoy quarterly returns, to enjoy quarterly payment, we will deny input tax credit benefit to you as well as your buyer. This is the scheme that we have for people who are growing. But if you're already big, your turnover has already crossed 75 lakhs. Okay, 75 lakhs, again you will replace it with 1 crore, 1.5 depending upon this thing. So if it has already crossed 75 lakhs, you are a regular or a big supplier. Regular GST will apply. Regular GST will apply. So this is how they have bifurcated people into. Okay, so now it is time for us to understand the scheme in detail. So I told you section 10 has got 5 subsections in it. 10 subsection 1 is talking about the eligibility, okay, in terms of aggregate turnover. 10 subsection 2 is talking about who is not eligible to opt for the scheme. 10 subsection 3 is telling if you cross the limit, the scheme will stop. 10 subsection 4 is saying, okay, 10 subsection 4 is talking about not to collect tax from the buyers, and 10.5 is the penalty section. So these are the sections that we have, 5 subsections. Let us understand one by one in detail all these points. Okay, the first very point that we have written on the board here, it is an optional scheme. So you should be very clear in your mind, this is not a mandatory scheme, it is an optional scheme, first point. Now you will get it out when to exercise the option. Let's say your client is a new client, he is going to get registered now for the first time, okay, under GST. At the time of application, registration application, there is one part, one form, you have to fill that up. Opting for a composition scheme, you need to do it when you're getting registered. Now alternatively, you have a client who's an existing client already registered under old laws, then migrated to GST, or existing client means he's a regular supplier under GST. Now he wants to opt for composition scheme. So is it possible? Yeah, you can opt for the scheme at the beginning of the year. So before the commencement of the financial year, you should make an application and you can opt for it. So very important point, you should repeat with me. This scheme is not mandatory, it is an optional scheme. Either you opt for it at the time of registration. If you're already registered, then you can opt it at the commencement of the financial year. Now very important point, section 10 subsection 1. What is this section telling? If the aggregate turnover is up to 75 lakhs, now we need to understand 10 subsection 1, okay. If aggregate turnover in preceding financial year does not exceed 75 lakhs, okay, the registered person or the supplier may opt for composition scheme. So they are asking us to look at last year's turnover, aggregate turnover in the preceding financial year. If it does not exceed 75 lakhs, a person will be eligible for composition scheme. However, this 75 lakhs has been enhanced to 1 crore and then again 1.5 crore. They have made it 1.5 crore. Okay, now it is very important. This limit if the person is in special category of states, then this limit is 50 lakhs. In special category of states, this limit is 50 lakhs. Now, what do you mean by special category of states? Okay, special category of states is Arunachal Pradesh, okay, Assam, Meghalaya, Mizoram, and then you have Manipur. Manipur is a northeastern states we are talking about, Manipur. And then you have Tripura. You have your Sikkim, Himachal Pradesh. Tripura, Sikkim, Himachal Pradesh, Nagaland. Nagaland is also there. So this is the list of special category of states. You should not forget this list. It is coming to how many? 9 in number. Repeat: Arunachal Pradesh, okay, Assam, Manipur, Meghalaya, Mizoram. 3M. Then you have Nagaland, Sikkim, Tripura, Himachal Pradesh. So for special category of states, this limit is 50 lakhs. Okay, now it is time for us to understand definitions. Okay, when it comes to definitions, we are discussing two words, aggregate turnover, and we are also discussing turnover in the state. Aggregate turnover, if you watch, is defined under section 2, subsection 6. Turnover in the state is defined by section 2112. Okay, why do we need to know these definitions? Okay, what is the reason? Let me write here. why we are discussing these definitions. Here I am putting turnover in the state. This is also defined by way of section 2112. What is the necessity to know these words? Okay, this particular word aggregate turnover is required because to know the eligibility. Whether the person is eligible or not for the composition scheme depends upon how much is his aggregate turnover. Whereas the other one is needed for payment of tax. We know that in GST it is state-centric registration. Okay, so state-wise, if you are opting for composition scheme, rate, that small rate of tax into turnover in state is to be paid. So try to understand this concept. So because it is a state-wise registration, you are registered in each state. You are checking the eligibility criteria. Based on eligibility criteria for all India level basis, on your PAN basis you are eligible. But when it comes to paying the taxes, you have to do it state-wise. So when you are doing it state-wise, you will apply that small rate into turnover of that particular state. Okay, it is not R into aggregate turnover. The tax that is to be paid by you is not R into aggregate turnover, because aggregate turnover is having all the states. You are doing business with in so many states. All states is aggregate turnover. But that cannot be a single tax. Whom will you give that tax to? You have to give state-wise. So that's why turnover in the state is relevant. Okay, now it is time for us to understand what do you mean by aggregate turnover, or what do you mean by turnover in the state. It is aggregate turnover is nothing but taxable supply plus exempt supply plus interstate supplies. Okay, interstate supplies. Made from each state. Okay, it shall exclude inward supply, taxable under reverse charge mechanism. It shall exclude taxes, central tax, CGST, SGST, UT, GST, all that will be excluded. Okay, this is the significance. So what we are saying, aggregate turnover means aggregate value of all taxable supplies. That means you have different types of supplies. So everything which is taxable will come here. Exempt supply, you should also consider exempt supply. Now you have to be careful here, my dear students. Export of goods. So I missed to write exports here. Export is also to be coming. Export of goods and interstate supply. Interstate supplies. You are supposed to consider all this in aggregate turnover. That means basically we want to know how big you are. Our intention is not to find out what is taxable under GST. Rather we want to know, are you big or small. So to know whether you are big or small, we are interested in everything you do. So you are doing interstate supply, you are having exempt supplies, you are having taxable supplies. Now what is exempt supply? Let's say you are selling some goods which are exempt by way of a notification, national flag, fruits, vegetables, okay, fresh curd, milk, unbranded items. So those kind of exempt supplies also we should take, exempt by way of a notification or by way of a special order. Interstate supply we are supposed to take, and exports also we have to take. So we want to know how big you are, irrespective of whether your supply is taxable or not. All these are your outward supply. Okay, take your outward supply. Then we also get a doubt. Under GST there is a liability on inward supply. If there is a liability on inward supply, are we supposed to take that inward supply? Answer is no. We are interested from your outward point of view, not from your inward point of view. You are not supposed to take inward supply taxable under reverse charge mechanism. Exclude the taxes. See, sometimes we get a doubt. Okay. We want to know some value. So this value is nothing but the turnover plus tax on it. Okay, turnover plus tax. So there is a possibility this turnover and tax is crossing 75 lakhs. Okay, but if you ignore the tax, if you take only the turnover, then it is less than 75 lakhs. If you take the tax on it, it may cross 75 lakhs. If you don't take tax on it, it is less than 75 lakhs. So whether we should consider with the tax or without tax. So they are saying aggregate turnover does not include any taxes. You don't have to consider taxes here. You simply go with your outward supply. This is what they are saying. So this figure shall not be more than 75 lakhs. And how to compute this? All business verticals, all states having same PAN. We will do that little later. But basically aggregate turnover is not taxable turnover. It means every turnover, whether taxable or not. It may be taxable, exempt, interstate, exports, include everything. Okay, these are calculated of persons having same PAN. Okay, having same PAN on all India basis. So this is to be calculated. How do we calculate this? Aggregate turnover. This turnover is, aggregate turnover is of persons having same PAN. Persons having same PAN, okay, computed on all India basis, all India basis. So we are calculating on all India basis, and it is with respect to persons having same PAN. So how do you appreciate this point? We will do it when I am discussing the other point, verticals and all. So basically you have many units, you are registered in multiple states. A single company or a partnership firm with the same PAN is working from 3 different states, or they have so many verticals and units. Everything put together, what is the aggregate turnover? This is what we are checking. Now what do you mean by turnover in the state? So here we are saying state centric registration. So you will be paying taxes, which is R into turnover in the state. Turnover in the state means what? Again, it is taxable supply, it is exempt supply, it is interstate supply, it is exports made from each state. You should be, from that particular state, how much supply you have done, that we need to check. And again, this shall exclude inward supply, which is taxable under reverse charge mechanism. It shall exclude taxes. Same concept. There is no big difference here. Here we are using the word aggregate turnover, whereas here we are using the word turnover in the state. This is to check eligibility. This one is to remit the taxes. In order to remit the taxes, we are interested in knowing what is the turnover of that particular state. So this is what they are trying to tell us. Okay, so now we finished learning what do you mean by aggregate turnover and what do you mean by turnover in the state. So let me help you with the further points. We finished up to this stage. Persons not eligible. Okay, so we want to know who are the people who are not eligible for this kind of composition scheme. So basically we are not interested in big people. Persons who are not eligible. So let us see who are not eligible. Section 10 subsection 2, the ineligible list. Supplier of service. Okay, this comes with some note. A person who is selling, or a person who is supplier of goods which are not taxable. Supplier of goods not taxable under GST. Then we are further analyzing and saying interstate supplier, not eligible. Okay, then we are further saying that person who is supplying through, electronic commerce operator, Further we are saying that manufacturer of certain notified goods. This is the list which is important. So section 10 subsection 2 is telling if we find these kind of people who are into these kind of activities, these are all called big activities. So if you are into big activities, then we will not give you this composition scheme. Now, what do you mean by big activities? Let us analyze one by one. Supplier of service. See, composition scheme has to address one important sector. When you start from your house, everywhere you find these hotels, restaurants available. Small hotels, tiffin centers, or the Irani chai hotel or the restaurant, they are all there every corner. So imagine if these hotels, if you ask them to get into the mainstream of GST, the regular scheme, nobody will be happy. They are not so educated to even comply with GST. If you force GST on them, they will simply escape, they will run away from it. So we need to understand this restaurant service, we have to give them the shortcut scheme. If you don't give them, they will never come under GST. They will evade taxes. So that's why this has an exception, supplier of service. So except restaurant service, if this is the case, can opt for composition scheme. They can opt for composition scheme. Nobody is stopping them. And as I told you, in the 23rd GST Council meeting conducted in November, the GST Council recommended that even they came up with one exemption. So I'll just read out that exemption for you. The person who's under composition scheme, if he is supplying services, okay, a person under composition scheme, if he is supplying services, such services are exempt up to 5 lakhs. Such services are exempt up to 5 lakhs. This is what they are saying. Supply of services by composition taxpayer up to 5 lakhs per annum will be allowed by exempting. Okay, normally you should not supply services. We are putting one condition. Section 10 subsection 2 is saying that you should not do supply of service. Okay, however, this condition comes with an exemption. This exemption says up to 5 lakhs you can supply service. Now, why they are doing this? See, small shops are there, computer shops are there. A shopkeeper is selling a computer. It is obvious that he will do some service like repairing, maintenance, assembling, formatting. When he is doing these kind of services, he becomes a supplier of service. If you read section 10 subsection 2, it is putting a restriction. Persons who are coming under composition scheme should not be service providers. So such a shopkeeper whose mainstream is to sell the computers may also do some kind of service. If you outrightly refuse the scheme for him, it is not fair. So the latest council meeting is saying we will allow them to do these services up to 5 lakhs. This provision will help small shop operators in providing services along with sales. Okay, because anyways, as I told you, this amendment is not relevant for May exam. Okay, it was not relevant for May exam as it came only in November, that is recommended in November. So for November 2018 attempt, anyways we will update the lectures with amendments. So that time you can see it in detail. But I am just telling you, section 10 subsection 2 is putting a restriction that composition scheme person should not supply services. However, this restriction is not applicable. A person who is having a restaurant service is eligible to opt for composition scheme. Nobody is stopping him. Supplier of goods which are not taxable under GST. So, if somebody is supplying petrol, alcoholic liquor, these goods are not taxable under GST. They are taxable under some other law. Such a supplier. So, there is one fellow who is selling liquor. He's got a wine shop and he's also having a stationery shop. Now, wine shop and stationery shop, such people should not opt for composition scheme. See, because composition scheme is taking aggregate turnover and putting the tax rate on it. So, if you are into supply of goods which are not covered by GST, this scheme will become wrong if you take our rate of tax and put on aggregate turnover. Aggregate turnover includes taxable supply and exempt supply also. So it will not make sense. So better you people don't come. So all the people who are selling goods which are not covered by GST, this scheme is not for you. You better be in regular scheme, because if you come to this scheme on your aggregate turnover, we will end up putting tax, and aggregate turnover will include such turnover also. Okay, that is what they are saying. So repeat again, aggregate turnover includes even a turnover which is not subject to GST. So if that person comes under composition scheme, we will end up taking tax on his total turnover, which includes sale of petrol, sale of alcohol, which is not correct. So therefore you don't come, better you don't come. We can't split the turnover, we are not taking detailed records from you. We are not interested in all that. So we will not entertain you at all. You are not going to come under this scheme. This is what they are saying. Interstate supplier. So a person who is making interstate supply, supplier is subject to IGST. This composition scheme is not replicated there. It is here. Composition scheme is for persons who are small shop fellows doing intrastate supply, doing local sales. So if you are doing interstate supply, this scheme is not for you. You are big enough. You should not even do branch transfer. Okay, suppliers doing intrastate sale, intrastate supply are alone eligible for composition scheme. So you should be small, You should be dealing in taxable supplies. You should not be dealing in non-GST supplies. You should not be doing an interstate supply. You should just be limited to your own state. Okay, then we can give you the scheme. If you're doing an interstate supply, then that turnover should go to IGST. 2 states are involved, records are needed, it becomes cumbersome. So we want to entertain people who are just doing local supplies, not interstate supplies. Person who's supplying through EC, electronic commerce operator. If you're using a web portal, okay, again, you will be subject to the provisions of TCS, okay, where the web portal will deduct some tax and remit, then they will file some return, you have to file a return, so TCS provisions will apply. So if we apply compensation scheme, it will conflict with TCS provisions. Okay, if supply is happening through e-commerce operator, there's some other chapter called TCS chapter handling that situation. If we put composition scheme on it, it will conflict with that chapter. So we don't want people, and people who are selling through web portal are deemed to be big. We want more transparency from them, because see, e-commerce, the size of that business is more than $100 billion. So how can we give them shortcut scheme? We will not take risk. So this scheme is not for people who are selling through web portal. Manufacturer of certain notified goods, even you should not come. What are the goods which are notified? Some kind of tobacco, pan masala, ice cream, these have been notified. So people who are into these kind of products, again, these kind of products, composition scheme is not applicable. See, end of the day, the buyer is also happy when he is buying from composition scheme. So we don't want a person who's smoking to be happy. Why he should pay small rate of tax? Okay, those are taboo goods, they are not good goods for the society. Let him pay a high rate of tax. Composition scheme is for other products, not for products like cigarette, pan masala. We want to discourage those goods. Why we will take small rate of tax on such goods? We will take regular rate of tax. Ice cream is always in demand. If right from chote se bade, everybody is eating ice cream. The government cannot afford to lose revenue there. Why they will take small rate of tax? They want a big rate of tax, regular rate of tax on such goods. So every point has a reason, my dear students. If you remember the reason, it's very easy to remember the scheme as well. So what did we learn now? We are learning section 10, subsection 2. What is the section telling? The following people are not eligible for composition scheme. Who are these people? These are the people who are supplier of services. You don't come. Practicing chartered accountant. He is saying that my turnover is less than 75 lakhs. I want to offer compensation scheme. No, the scheme is not for you people. It is for manufacturers, it is for traders, it is not for supplier. However, restaurant is eligible for composition scheme. This is point number 1. Then point number 2. There are some goods which are non-GST goods. Such people who are dealing in non-GST goods and taxable goods should not opt for the scheme. We will end up taxing your non-GST goods. Okay, people who are doing interstate supply, IGST will apply to you. This scheme will conflict with IGST, so better you don't come under composition scheme. People selling through e-commerce operator, don't come to composition scheme. Manufacturer of notified goods, this scheme is not applicable for you. Okay, what do you mean by notified goods? Ice creams, pan masala, tobacco products. These are notified goods. You should not come. Okay, what next then? Scheme will apply to all goods. Now, what do you mean by this? Scheme will apply to all goods. This is a very important topic. This point has to be read with this point, and this point has to be read together. Applicable for all transactions of a registered person having same PAN. Scheme will apply to all goods. Now, these are the 2 points. Mr. A, his preceding financial year turnover is less than 75 lakhs. He wants to opt for composition scheme. Okay, so now he has got a situation like this. He is dealing in same state, in a single state, goods 1, mobile phone, goods 2, okay, goods 2, bags, leather bags, goods 3 is some kind of stationery. So this person is got a doubt now. What is that doubt? He is saying that I will opt for composition scheme for one of the goods. Okay, I will opt for composition scheme for the mobile phone business that I have, but for the other businesses I don't want composition scheme. I want regular scheme. Can the person do so? Answer is no. Okay, answer is no. What if we write here? Scheme will apply to all goods. So whether you like it or you don't like it, once you have opted for the scheme, all the goods that you are dealing in will be subject to composition scheme. You cannot say one I will go with composition, another I will go with regular. The entire business will be subject to composition scheme only. Now I will change the example. Different state. Okay. I am into goods 1. I am selling mobile phones from Andhra Pradesh. I am selling bags from Tamil Nadu. I am selling stationery from Telangana. Okay, Telangana state. These are the 3 states I am doing sale. See, in 10 subsection 2, we have written that you should not do interstate supply. I am not doing interstate supply. I have 3 branches in 3 states. Each state, in AP, I am doing intrastate supply. In Tamil Nadu, I am doing intrastate supply. In Telangana, I am doing intrastate supply. There is no interstate supply. There is no branch transfer. Therefore, eligible for composition scheme. His aggregate turnover from all the business verticals in all the states in India is not more than 75 lakhs. So, he is eligible for composition scheme. So, once he is eligible for composition scheme, now he is getting a doubt. Can I opt for the scheme in one state? In Telangana, I will go with composition. In Tamil Nadu, I would prefer regular scheme. Like that, he is getting doubts. So, answer to him is, once you have opted this scheme will apply for all states. You cannot say one state I will go with regular scheme, another state I will go with composition scheme. For all the states, the scheme will apply. See, I am not confusing you. You have to be clear. 10 subsection 2 had put a restriction, don't do interstate supply. Yes, I am not doing interstate supply. That section never said you should not operate from more than one state. Then the section never said you should not be spread across the country. You can operate from so many states. I have branches in 15 states. Each state does a local supply. I am eligible for composition scheme if my turnover doesn't exceed 75 lakhs. But once you have opted for the scheme, all the branches, all the states, this scheme will apply. All the goods you are dealing in, this scheme will apply. Like that they are saying. Because see, if you opt in and if you apply regular scheme for some goods and composition for some goods, for the department to check you will become difficult. Because they are saying without detailed records, we will go with shortcut scheme. So that's the reason they are saying it will apply for everything. So let me read that point for you. All registered persons having the same PAN have to opt for composition scheme. All the branches you have to opt for composition scheme having the same PAN. If one registered person opts for normal scheme, others become ineligible for composition scheme. So if a person has different businesses registered in different states, all the businesses, all the units should opt for composition scheme. If any one unit is opting for regular scheme, others will become ineligible. This is one point, okay, very important. Another point we said, Composition scheme may be opted for by taxable persons in respect of supply of any goods without classification. Taxable person cannot opt for payment of taxes under composition scheme, say for supply of class of goods, and opt for regular scheme for other classes of goods. So class wise all goods will be subject to composition scheme. Business wise all business verticals will be subject to composition scheme. Whether in one state or more than one state, this scheme will universally apply if you are having a same pan against the same pan. So this is another important point. Rates of composition tax. Now what are the rates of composition tax? Let us just see that once. So if you are a manufacturer, if you are a trader, if you are a supplier of service having a restaurant, what is CGST, what is SGST, what is total? Okay. So earlier this is 1%, 1%, 2%. Composition scheme is a concessional scheme where we are taking small rate of tax. Okay, then trader is 0.5, 0.5, and this is 1%. And this restaurant is 2.5, 2.5, and this is 5%. So if you compare this with regular rates of taxes, 18%, okay, or if you compare with 28%, 12%, these are very small rates. Those rates are very high. Of course, those rates will come with input tax credit. This is without input tax credit, but the rates are small rate. For manufacturer, effectively it is coming 2%, for trader it is coming 1%, and for restaurant it is coming as 5%. These are the rates which are reflected in your study material, but as I told you in the latest council meeting, they have changed these rates as well. So what did they do? Even the manufacturer, it became 1. 23rd council meeting, 23rd meeting. So as for the 23rd council meeting, this became 1, this is already 1, and this is 5. They didn't change. This they have reduced. And here they are saying 1% of taxable turnover. This is 1% of aggregate turnover. These are the amendments which have come. If you refer to your book, the book will have these old rates. But the latest amendment, November 2018, students, for you, this 2 became 1, this 1 remains 1, 5 remains 5. Another change is, in case of manufacturer, we are taking 1% of aggregate turnover. But for a trader, we are taking 1% of taxable turnover. Now, what do you mean by taxable turnover? You will be exclude exempt supply. So if the shopkeeper is selling fruits and vegetables, it is exempt. On such exempt supply, there is no tax. So like this, they are asking us to check rates of taxes under composition scheme. Hope you have understood.